Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon and thank you for coming on today.
Good afternoon, Devin.
Well, let's start with the concerns about interest rates. The yield on the 10-year Treasury coming down from yesterday's peak to around 1.5. Still, some say it could be headed to 2% by the end of the year. What do you see happening with the rise in rates here?
First of all, recent ups and downs of U.S. Treasury bond yield is related to increasing inflation pressure. Whenever inflation rate changes, the same amount of automatically reflected in bond yield or interest rate. Yesterday, U.S. 10-year Treasury bond yield temporarily decreased down to 1.5% level from previous 1.6% due to U.S. government's 10-year Treasury bond sales of 38 billion U.S. dollars. But because of ample liquidity and economic recovery, U.S. inflation is slowly increasing from the end of last year. December of last year's annual inflation rate was about 1.2%, but it increased up to 1.7% in February of this year. So it is highly expected that inflation goes up by the end of year with higher bond yields or interest rate in the United States.
The situation is affecting bond markets all over the world, of course, including Korea. Some concerned about all the debt taken on by the Korean government and others to fight the pandemic. What do you say, Professor?
Inflation pressure spreads out to almost every major economy, and Korea is not an exception here. For limiting the rise of interest rate, we have to stabilize inflation. But higher inflation is driven partially by higher production factor prices in oil, natural resources, and agricultural products. But Korean economic import most of these materials, which makes difficult to control inflation. And if government goes to another round of emergency relief fund, which is financed by government bond sales, higher interest rate will give a larger burden to taxpayers in the end.
Well, let's turn to stocks for a minute. Wall Street closed higher for the most part overnight, though not the big tech stocks. It was the Dow with a gain of almost 1.5%, closing at a new all-time high. What's the story in the global markets?
Before yesterday's U.S. market rise, U.S. market has been much more volatile than before because of higher U.S. bond yield which we talked about before. Dow Jones Industrial Average climbed more than 450 points or 1.5% to a record Wednesday due to lower bond yields and U.S. House approval on 1.9 trillion U.S. dollars COVID relief bill. But NASDAQ marginally dropped by 0.04% on Wednesday.
And in Korea, a solid gain today across the board. The Kospi now back above 3,000 and the Kosdaq back above 900. Tell us about the local markets.
The domestic market had a great performance today. Of course, it is affected by yesterday's U.S. market great performance. Actually, after having 5 straight day loss in domestic market, Kospi increased by 1.9% today, and Kosdaq also increased by 2.2% today. Particularly, foreign investors led both markets of Kospi and Kosdaq with aggressive purchase over 1.9 trillion won.
And I want to ask you about Korea's exports. In the first 10 days of this month, they're up around 25% from a year earlier. So we've seen a rise now for each of the past 5 months. What's driving the rise in exports?
Korean export is gaining more momentum over more than 5 months. And Korean export expanded by 9.5% last month, February, posting the best performance for a month of February in 9 years. In early March, export continued to increase by 25% compared to the same month in the last year. This month, Korean export increase is led by major export items of memory chips, 25% export increase, automobiles, 23% export increase, and petrochemicals, 28% export increase. For export destinations perspective, export to China increased by 34%, and to U.S. 22%. As COVID vaccine is distributed over major countries, Korean export will continue to increase by the end of this year.
And before we go, Professor, I'd like to ask you about Korea's economic growth this year. Investment banks have raised their forecasts to 3.6%, the OECD calling for 3.3%. I believe that's even more optimistic than the Bank of Korea. So what do you think of these estimates?
I think OECD is focusing on South Korea's rapid increase of export, as we talked about before. So since South Korean economy is highly dependent on foreign export and import, over 70%, actually one of the most highly foreign dependent country in the world, recent export increase has a significant sign for recovering Korean economy. That export increase is reflected in adjusted OECD's economic forecast of this year up to 3.3%.
Got it. All right, Professor Kim, thank you so much for sharing your insights with us today, as always.
Thank you very much.